In today's video, we're talking about profit and loss calculation and how to know your profits and your loss before or during taking a position. If you are new to the channel, this is Remit Trade Channel, where we give out informative videos and educational information on forex trading and cryptocurrency trading. So if you're new to the channel, do well to subscribe to the channel, hit the notification bell, and smash that like button for you guys. So let's get into it. Profit and loss calculation is very simple and it's easy, okay? Just with this formula, you will know how to calculate your pips. You know how to calculate your profit and your loss very well. Alright, so it's very important for you to know that for you to actually take a position, or before you take a position, you should know the profit that you will make, or you should know the loss that you will incur as a result of taking that position. So profit and loss calculation have the same formula, okay? So we have value per pip multiplied by number of pips multiplied by the lot size used. Okay, so the value per pip here, I talk about value per pip calculation in my previous video, so check that video out, it's very important. Then the number of pip here is very simple. Now the number of pip is number of pip from your entry price to your profit target. In the case of you calculating the profits, the number of pip here also means your entry point to your stop loss in case you are calculating your loss, that is your risk. Remember, from your entry point to your stop loss is your risk, while from your entry point to your TP is your reward. Okay, so that is number of pip. Now the lot size used depend on the trader itself. Okay, so it depends if you are using 1% of your entire portfolio, that's your equity, or you're using 2% of your equity. Okay, so if you take the value per pip multiplied by number of pips multiplied by your lot size used, it will give you the profit or the loss that you will incur in that particular position. It can be sell or buy position anyhow. Okay, so let's say, for example, if a trader A take a long position, that is a buy on Euro USD with 2 lot size, and the trade move 45 pips upward, that is in its direction, okay, it means that that trader will have $10, okay, because for every standard lot in Euro USD movement, we have $10 multiplied by 45 pips, which the trade move. Okay, 45 pips which the trade move multiplied by, let's say, for example, the trader took 2 lot size. Okay, so if you multiply this, you will have your profit in dollars. So the trader will make $900 from that particular position from this calculation. So if you do this calculation, $10 for this value per pip multiplied by 45 pips, that's the trade move multiplied by your lot size, which will give you $900. The same thing happens when you want to calculate your loss. Okay, so your loss, it means you take the number of pip from the point you enter to your stop loss. Okay, that will give you the number of pip that you will put here times 2 and times 10. It will give you your answer in dollars. Okay, so that's how you know your loss. So should in case the market go against you, you know how much you will lose in that particular position. In this example, a long position. So that is how you calculate your profit and loss. Let's go to the next slide now. What is bid price? Now, some traders don't know what bid price actually is. I want to explain in detail what bid price, ask price, and spread actually mean. Bid price is the price at which the market maker is ready to buy a given currency pair. So at that price, the trader, which is a seller now, can sell the base currency to the market maker, and the bid price is always shown on the left hand side of the quotation of a currency. So let's say you are in South Africa and you have some rand and you want to exchange your rand for dollars, for US dollars. Okay, so what you do, you go to the bank. Now the bank in this case is now the market maker, while you are the trader. Okay, I want to paint this picture now. The bank in this case is now the market maker, while you are the trader. Now, since you have some rand and you want to exchange it for USD, it means the bank will buy rand from you, while you are taking back, US dollars. Bank is actually selling you US dollar, while you are taking US dollar from them. So in this case, you are the seller, while they are the buyer. Okay, so in this case, you don't have a choice to fix price. They already have a fixed price for which they want to exchange your rand to dollars. Okay, so this price is called the bid price, because that is the price for which the market maker, which is the banker, is ready to buy that given currency, that is the rand, and it is at that same price. See, that same price is where you, the trader, that's the seller now, want to sell that particular currency. Is very simple. Okay, so in this case, for example, in the quotation of Euro USD, and you have 1.4690, it means that 1 euro will be exchanged for 1.4690 US dollars. It's very simple. Ask price is a price at which the market maker is ready to sell a given currency pair. So at that price, the trader, which is the buyer in this case, can buy the base currency from the market maker. Ask price is always shown on the right hand side of currency quotation. Okay, so let me use the same example. In this case, you have some dollars. Okay, you want to sell dollars in exchange for rand, and you are in South Africa. So what happened here is you go to the bank. Now the banker here is the market maker and you are the buyer. Once you do that, you exchange your dollar and buy rand. Now you don't have a choice in fixing price. They already have their fixed price. So it is at that price that you will buy rand from them when you exchange your dollars. Okay, so at that price, you exchange your dollar for rand, and that price is called the ask price. You don't have anything to do about the price. You don't really have a choice in this case of forex. If it is cryptocurrency where you place different types of orders like market order, limit order, or stop limit, that is a different case. We are not talking about order here. We are talking about ask price and bid price in forex trading. It's a two different things. So let's say, for example, you see Euro USD quoted 1.4670. It means that for 1 euro that you will exchange, they will give you 1.4670 US dollar in exchange for that particular transaction for 1 euro. Remember, ask price is also known as offer price. In cryptocurrency, you see offer price instead of ask price, and that's very, very simple. I hope that's very clear. Now the next one is spread. Now the spread is the difference between the ask price and the bid price, which is also known as transaction costs. Transaction cost, and this is simply the fee that the market maker, in this case of forex, the broker, charge you for the service they render to you to participate through the forex market through them. We all know that the forex market have different types of broker. We have ECM brokers, STP brokers, and some other types of brokers. Now it depends on the kind of broker that you are using. Some broker don't charge spread, instead they charge commission. It's still the same thing, because the spread here is the transaction cost, which we call the fee that the market maker charge you for participating in the forex market through them. Is very simple. Okay, so that is how you calculate profit and loss. You know your spread, your bid price, and your ask price. Is very simple. Okay, so let me go to the MT4 platform and show you. So let's say, for example, you want to place a long position on Euro USD. So if you want to place a long position on Euro USD, and you, from your own calculation, you are expecting the market to go up, and let's say in this case you enter at this very point, and from here to this area is, let's say you're looking at 40 pips. Okay, let's say you're looking at 40 pips stop loss from your entry point. So if you enter 40 pips stop loss from your entry point, it means your loss in this case, let's say for example you're using 0.2 lot size, it means your loss will be 40 pips times your lot size times your value per pip. Remember, this is Euro USD, and Euro USD, 1 pip movement for a 1 standard lot is $10. So you do 40 multiplied by 10 times 0.2, and you will have $80 loss on this particular transaction or trade, should in case the market go against you. Now, the reverse is the case. So if you are looking at 50 pips for your profit target, it still means that you will have 50 multiplied by 10. And if you change your lot size maybe to 0.09, or you still maintain the 0.2, then your profit calculation, in the case you're using 0.09 as your lot size, it will be 50 multiplied by 10 multiplied by 0.09, which will give you $45. Now, the same calculation applies anywhere. Once you know your value per pip for a particular currency pair, and then you know the number of pips, in the case of loss and profits, you can do your profits and loss calculation. Very, very simple. So I hope the video was very, educative. Thank you for watching, guys. Ensure you subscribe to the channel and let's grow the channel together. Don't forget to hit that like button and turn on the notification so that anytime I upload a video like this, you will get notified. Thank you very much for watching. See you in the next video.